So there was an interesting article that was published recently that I thought would be great to talk about on this channel, as it's really telling on what's going on in the multifamily real estate market. And if you're an apartment investor or you plan on being one, this is important for you to know. Now, one fact that you may or may not be aware of when it comes to apartments, and like a lot of things, is the more units you have available, the more inventory there is, the less you can charge for that inventory. In other words, it's a fact that the more apartment units that are built in a specific market, you'll have more downward pressure on rents in that market as well. The opposite is also true. The fewer the apartments there are in a given market, the more opportunity for operators or investors to be able to maintain rents or even increase rents. And as you may know, rental income is the primary source of income for a multifamily property. Now, a couple things I want to highlight that are really important to call out before I go any further is that we are currently in a housing shortage. Depending on who you ask, we're anywhere from 4 to 6 million units short in this country right now. But that plays out very differently in local markets, which leads to my second point, that there's truly no nationwide real estate situation. Real estate investing is very local, even down to the corner or the block. Now, yes, national data can help give you a sense of what's going on across the country and give you some indication of perhaps general trends, but it could be very different in the market you're looking at specifically. And for this reason is why I wanted to highlight some of the data that I found this week that I thought would be interesting to you. So a company called RealPage had released this week some information as far as what they were seeing in terms of inventory growth across the country and also rent growth across the country. And they did it by markets as large as Los Angeles or Chicago, or as small as Greensboro or Virginia Beach. And the insights were pretty interesting. In 2023, developers across the country delivered 440,000 units of apartments, which is pretty incredible. Take a look at how this compares to the historical. So this graph shows the number of apartments that were delivered in the US by year, going back all the way to 1973. And you can see we had some periods of growth. In the mid-'80s, we had a substantial number of apartments being delivered. During the recession we had in 2009, 10, that was kind of a low point. But if you look at the last couple years, we've really almost been breaking records. It says here 460,000 apartments to be built in 23. This was published in mid-23. It ended up being 440,000, and that's a record. And that looks to continue to increase here at least in the next year or two. Now, this doesn't fix the problem of this country having 5.5 million units short of housing, but it certainly helps. Now I'm going to show you what it means to be hyper-local in a market and how that compares to national averages. Now here's a graph showing individual cities, individual markets, and how they compared. On the y-axis is inventory, so the higher the number, the more inventory that market absorbed in 2023. And on the x-axis is the effective rent change. So 0 is this gray line here, so 0 essentially means no change in rents. Below that number is that there was actually negative rent growth, which means rents were decreasing. And then if you look to the right, it means rents were increasing. And what's really fascinating about this graph is that it shows you the individual markets and how they're performing, and you can see there's some big differences here. Now, I mentioned the US added 440,000 units in this year, 2023, but that was concentrated in certain markets. Let's take a look at this in more detail. So this shows here the same graph I showed a second ago, but what's circled here is those markets that had a really high level of inventory growth in 2023, combined with decreasing rents. And so some of the markets that had the most inventory added in 2023 were cities like Salt Lake City, Nashville, Raleigh, Charlotte, Austin, Jacksonville. You can see all these markets had a tremendous amount of inventory. Salt Lake City, over 7% of their market increased over 2023 in terms of unit count. It's an incredible growth. And what happened is kind of what you might expect happened, is that rents decreased. In terms of Salt Lake City, we're looking at 3.5%, let's say. Austin had 6% inventory growth and almost 6% decrease in rents. That's a huge deal. And you can see it affected these cities differently. Cities like Fort Worth had 4% growth in their inventory, which is substantial, but they had less than 2% of a decrease in rents, which is still substantial, but a lot less than Austin. So you can see, even within Texas, Austin versus Fort Worth and Dallas is pretty different. Hey, real quick, are you liking this video? Please click the like button so YouTube knows that this is quality content and they'll share it with other immigrants. Now back to the video. So now we look at the markets that had the highest rent growth with the lowest increase in supply. And as you can tell, a lot of these cities that you see here are in the Midwest, the Northeast. They're not the hot cities you think of. Cities like Cincinnati, Cleveland, Chicago, St. Louis, Kansas City, Orange County, Virginia Beach, St. Louis. These are all markets that did have an increase in inventory, but nowhere near as close as some of the other ones that we talked about a minute ago. But they had a very big increase in rents, which as an apartment investor is a good thing. So notice that a lot of the hot markets right now in terms of growth, like in the Sunbelt states, really aren't captured in this quadrant because we just talked about them a second ago. Those markets are growing substantially in terms of inventory. So if you notice in the circle area, there really aren't any Sunbelt cities, the cities that are really focusing on increasing inventory. And these are the cities that kind of maybe most people ignore across the country, but these are producing great returns for investors because there's not a whole lot of inventory being added. And because of that, then rents subsequently had the opportunity to increase. Now let's look briefly at markets that had low supply gains, so low inventory gains, but also had rent cuts as well. And these are markets that are having a tough time recovering right now. Markets like Las Vegas, San Jose, Seattle, San Francisco. Those are, some of the big technology centers, for example, are on this list. And maybe they've lost people over the pandemic due to remote work and things like that. Even though there's not a whole lot of inventory growth, they still can't keep rents up because they're having a harder time filling up their units. So this is an interesting side effect. And if you live in one of those cities or you're investing in one of those cities, it's good to know. And finally, in this graph, I want to show you just a few cities that had some decent inventory growth, but also had some rent growth too. These are Minneapolis, Denver, and Columbus are on this list. So these are markets that are doing well, that are growing in inventory, but also growing in rents, which is kind of unique compared to the rest of the country. So what I like about this graph is that it really demonstrates how local real estate investing really is. If you look at the national average of inventory increase in 2023, it was 2.8%. And if you just read that stat, you might think, oh, my market's growing 2.8% in inventory. While that's misleading because you can see by city, it's a very different story depending on where you are. So I hope you found that useful. Information like this is coming out all the time from different sources, but I thought this one was really interesting to really highlight the fact that real estate investing is a very local thing. So you may be wondering, how do I get started in apartment investing? Well, I created a video right here, which will give you a guide as to how to get started. So thank you for watching the Immigrant Wealth channel.